Hi, everybody. Today I'm just going to be chatting to you about this chappy, which is a schedule of replacement values. Very, very briefly, just one aspect of it, and particularly uh, additional sums column. So if you look at the additional sums column, if you just focus down, because we're talking about the owner's interest in this thing, we've got another video which you can see here. Go and have a look. It goes into more detail together with the booklet that we've got in it, which is also downloadable here. But particularly, I want to speak about the addition sums column. So if you look at that addition sums column in this example, you will see an amount there. Section 13 has got an additional sum, and that would be for improvements that they've made to their section. So, for example, an owner can contact the managing agent or the body corporate or the trustees, whoever, not the broker, first go via the body corporate, and then they can actually, in terms of it's prescribed management rule, one of the first rules in terms of the insurance 23.1, and the owner's got the right. It says there it, that uh, the member can at any time, by written notice to the body corporate, require that the replacement value specified for that member's unit or exclusive unit be actually increased. Okay, so that's quite important. The section owners got the right to increase their value at any time, as long as it's in writing. The AGM is a good time to review it, and because this gets prepared before every annual general meeting. And then what you do is, you just let the owners know at the AGM that they do have this right. To remind them, because not all owners are aware of that right. For example, if you've done some extra finishes, the standard finish that the valuer has used is based on, the normal standard tiles that were used by the developer and maybe the normal kitchen countertops, etc., post form or what have you. And now you've moved in subsequently, maybe it's a few years later, and you've renovated a little bit before you moved in. You maybe put down some flooring, you maybe have preferred a different flooring or a more expensive tile. You might have redone the kitchen or put some granite in. Very typical things that are done. Definitely, people like to freshen up the flooring around the place. So you feel you want to add a little bit. It's very cheap. I always use the analogy of 100,000 Rand. If you add 100,000 Rand, it's probably going to cost an owner an extra 10, maybe 15 Rand a month on average. It all depends on the rate that's being charged for your scheme, but it's really cheap. So just have a look at those values, add it. The second part is where you, as an owner, have gone off to the bank and you have actually said to the bank, hey, I need a bond. The bank says, sure. And then, in layman's terms, they get you to sign a whole lot of paperwork. And when you sign that paperwork, one of the parts of it is, an agreement for the loan, and you give them power of attorney to register the bond. And in that power of attorney that you're giving them, it's effectively a mandate, call it a proxy if you want, whatever. But you're giving the bank, in terms of your bond with them, you're now bonded. They now receive an interest. In fact, they've got a very important interest in this policy, and they've got the right to act with you or for you in terms of the insurance. One of the things you agree to in writing, and might be in fine print, is that they can do that. So if they give you a bond of 2 million, but your sum insured is only 1 million, they're quite entitled to over-insure you. And if you don't like that, and you don't want to pay that extra premium, certainly go and speak to them, go and convince them to reduce the sum insured based on the most recent valuation or whatever, if you can find a person to speak to. Okay, so it's those two reasons, but yeah, either the bank's bond increases the sum insured or you as an owner yourself. Other than that, the trustees will insure to full replacement value per the valuation, and then hopefully upgrade it every 2 or 3 years. Okay, there you have it again. There's a sample, this sample PDF that you can download because there's a little QR code on there anyway for you to go and look at a booklet. There's also a download to a booklet. Click on the blue button below. There's a little booklet, and Yeah, there we go. See you again. Like this video, share this video, and of course, subscribe if you're not subscribed yet. If you're an owner or a trustee or a managing agent, you definitely need to be subscribed to this channel. Thank you. See you again.